My brother. How was your trading week, guys? Are you guys even trading, or you're just waiting?
Oh my goodness, I'm so frustrated. Whenever I look, I open my laptop,
Yeah.
I see everything has been moving every time. Like during the day, I can't open any.
Ouch.
So, yeah.
Okay, something is wrong with the screen. Why is it keeping on shutting down and on and off? You must have that core app on your phone. You can't even have your phone at work.
I have it. By the time this one time I read your messages, there were 100 and something. When I'm at work, I can't touch the phone. I'm that busy.
Yo.
Yeah, hopefully it will die down soon.
Then you need to learn to use also pending orders.
Yeah, definitely.
Yeah. Must be parents' kid.
For me, I haven't started live, man, this year, man.
Oh.
Yeah.
Yeah, you must take your time, boss. Don't stress yourself. Because the market it's hectic at the moment. You need to be strong.
It's very hectic.
Yeah. This
I think this job of mine is giving me a heart attack, man. I have to resign once and start afresh.
That's the whole idea.
Yeah.
but you need
Otherwise,
you need to get to a point where you think you'll be much comfortable.
Yeah.
Don't just leave.
but that time you will never come where you can feel comfortable.
No, it
Oh.
will. It will come.
Okay, let's see.
You just have to work a bit hard. That's all.
Yeah. Sleepless nights.
Just hold on, guys. I'm having an issue with my other screen here, so let me disconnect the screen. Just hold on.
Hello, sir.
Hang in there.
I'm here.
Yeah, at least today there's people. Right. Osmoja, how's it? Where's my sound? I can't hear people. I can't hear. Yebo. Can you hear me, guys?
Yeah.
Right. I've done my bigger screen is giving issue, so I was disconnecting it. Right. So as you have noticed, this week is due to the fact of there's like too much uncertainty in the market due to the virus, due to the European budget and all that crap. So it was a bit difficult. Terence, I think I'm gonna mute you a bit because there's noise coming down. So it was a bit difficult to like really get the levels correct. Even if you get the levels correct, it was a bit difficult to get proper entries. Right? Because of those fundamentals. But if you noticed how the market reacted, most of those levels, I mentioned them in the first webinar that I posted for this year, the one in 12 minutes, 1 hour, 12 minutes webinar.
That's the quarterly one.
Yes, the quarterly one. Most of those levels have been hit now. For instance, if you look at gold, 1623 has already been passed.
Mm.
Yeah.
Yeah. So there's further evidence that gold will keep rallying. To which levels? Now that I don't know. we need to.
I think it's going to the 800s now. If you look
need,
to the left, there's two equal highs of 2012, I think.
yeah, but 1800 per ounce. Oof. That's not gonna be good at this moment in time.
Is it possible that it will first retrace before a bullish trend?
Right. What I think gold is gonna do is, you see where we are right now.
Mm-hmm.
That's where gold is. It's at 1650. We can say 1650 already. I can see gold still pulling back to 1580, 1590 before another strong rally. Otherwise, it's gonna pull back again to 1623. But 1580 is not done yet. That level is not done. Yes, market can keep rallying as long as these coronavirus issues are still in the market. Gold is gonna keep rallying. Dollar is gonna keep rallying. So you must be in a position to capitalize on the levels that we mark. If you look at gold on dollar index, sorry, this is a weekly on dollar index. There's this level here that I marked first webinar. This was a supply, but it got breached and market went high. But now, can you see now it's Friday? This is the close of today's. The close of today, market is retraced back below 99.39, 99.32, which is a strong level. If you look to the right, to the left, 99.32 on dollar. There, you see? That shows a rejection of a strong dollar. There's a rejection here. You see the price action here. 1, 2, 3 here. It might happen here because this is a strong rejection of higher prices. So we could see a retest of this zone before we push to the upside. Can you see? Because now the question that you have to ask yourself is, okay, market is rallied the whole of this week. Dollar was bullish, strong bullish, but only in one day, which is today, we have seen a rejection, a strong rejection on dollar, right? You need to ask yourself why is that the case, that market is suddenly rejected? Can you see that drop on dollar today?
Yeah.
So now your assignment will be to ask yourself and go find out why is that so? What happened for that kind of drop? You see?
Okay.
So that will be your mission, to understand, okay, what's the reason for this drop? Because already this drop here, let me zoom in a bit. Can I zoom in? This drop already, it's creating a liquidity void. Market cannot just rally to the downside like this. So you ask yourself, okay, where is market heading? This is a daily time frame. If you look at this chart, guys, where do you think the market is going?
What's this? So below 98.7. It's just below, I think.
Boss Moja, where is Moja? Oh, he's gone. Terence, where do you think dollar right now is dropping down to? If the drop is a proper drop, where do you think it's going down to?
To 99,060.
9906. Okay. Terence says it's dropping down there. Okay, there's no one. Okay, Eddie, can you hear me?
Yes, I can hear
Right.
you.
Where do you think dollar is dropping down to?
It's going to drop to 98.640.
Sorry?
This one. It's going to drop to 98.640.
I can't hear you properly.
98.640.
Right, that's correct.
640.
Paula and Terence, you see this level here?
Yep.
That bearish candle there.
Blue.
Right. That's a new level of demand. Remember, supply and demand. That's a fresh level which hasn't been tested here. Now, if you look at that zone, at that candle, this bearish candle, and the next bullish candle, right? Look at the lows. There are two equal lows. There's liquidity down there, right?
Okay.
Two equal lows. So we can probably see dollar retesting the 98,500, which is the institutional level, right?
Okay.
Dollar can drop to that because already today is going to close as a bearish engulf. Can you see?
Yeah.
But now, since dollar is strong bullish, you're not going to take it short. Don't go short on dollar index because it can rally anytime. The only way you can go short, that's suicide. That is suicide if you decide to go short. Yes, the market is showing us signs that it's going to drop down. But this drop down in dollar index now, we can only use it to capitalize on gold, on fiber, on USD/JPY, or on other currencies. So this drop in dollar index, we don't short it. We only look at, say, gold to keep going high. We only look at fiber to keep going high. Because dollar index can drop like this and then the following day it rallies. So the only time we're going to look at long trades on dollar index is at this order block here. Okay? That's when we can anticipate to take the dollar index to the upside. Okay? Once it drops down here, then we start looking for long trades. And if it does come down there, the moment it reaches here, that means you should also be looking for short trades on fiber and gold. See? But as I mentioned before, gold, you need to be very careful. You need to be very careful with gold. Because right now, gold and dollar index, they are moving almost the same direction. Only for this afternoon, dollar index has dropped, but gold kept on rallying.
Rallying up.
You see? Gold kept on rallying. That's the only time that they didn't move the same direction this week. But since Monday, they were all trending to the upside. You see? They were all trending to the upside. So you must be very careful to say, okay, no, dollar index is dropping, but since we are having fundamentals that are really sketchy, uncertainty fundamentals, maybe I should also short gold. No, you can't do that. Yeah, but if you look on fiber now, you see, fiber you can go long because fiber and dollar index exactly opposite. Rally in dollar index, drop down in dollar index. Only Friday we have had a strong move to the upside. That's almost 77 pips to the upside on fiber, and dollar index has dropped already 60 plus pips. You see? So this is all fundamentals, guys. The reason for this drop is because of the Euro budget. The other countries, they said, we can't pay for the budget for Europe. Remember Brexit, guys, in a nutshell. Remember Brexit. So now Britain, officially, they are no longer contributing to Euro. So now the budget is like 1 trillion euro. So some of the countries, they're saying, no, we can't afford that. It's quite a lot. So now the Euro is way, way too much under pressure. You see? The Euro is way, way too much under pressure, which now comes down to me saying, okay, of course, Euro is retraced to the upside, but on a higher time frame, Euro, we can see 1.05, 1.03 being tested on Euro. Because remember, today is Friday. There's too much manipulation in the market. So next week is very crucial because today's news, yes, it can be used as a correction, right, in the market. But once the huge funds come back into the market next week, you can see further movement going to the downside. Of course, they filled the gap here and they rallied back to the upside. This looks like a fake out for me. Let me see if I can show you the news. Right. You see, can you see my screen?
Yes.
Yeah. EU gripped by budget chaos after Brexit. Austria, Denmark, the Netherlands, and Sweden refused to pay for 1 trillion. You see? So this is definitely gonna affect euro. So it won't surprise me that, okay, we're gonna see a push to the upside today. But come next week, the moment we go back to 109, you see here.
Yeah.
The moment we retest that level, we're gonna see probably massive bearish move to the downside. Oh, there's someone with I think it's a TV that's making noise now.
Hang on. Mangi, can you please lower the volume? Please lower the volume. Thank you. Lower the volume, please. Sorry about that.
All right. So now you can see already we have an order block here. So probably next week, Euro is also going to push into this level here before we start seeing further drops to the downside. You see, remember, we said dollar index, where's this thing now? We are looking at this block. Can you see the characteristics are all the same with fiber, but just that they're opposite?
Euro, yes.
You see? So the same setups that we are seeing here or on fiber, we are not seeing the same on gold. You see? That's what you need to be very careful of. It's not the same on gold. Okay, let me get a new chart here, which is cleaning. You see, there's nothing like that on gold. It's just rallying to the upside. So now you need to be very careful. So 1589 is still the level to look out for on gold to go higher. You see, but if you want to trade on shorter time frames, there's this chart here that I shared yesterday. I mean, I gave some guys to do this assignment. There, 1600. You see the 1600 zone. That's another good area to go to the upside if it retraces down, because we've got a new demand level here. See? The one that clears this high here. So this level here, it can drop. When it comes down, then we start looking for long trades. So for now, that correlation between Euro USD and gold, you must put it on the side. Trade what you see on the chart forget about the correlation right now, because the fundamentals that are in the market, they are not supporting the same thing. So you must trade what you see. Make sure you understand the structure of the market. So when I say, okay, let's short gold, we're not saying I'm not saying short also fiber because it's not, they're not moving the same at this moment in time. So you need to be very careful. Yeah. Right. What else do I wanted to say here? Where's dollar? Right. There's the order block 98. Here's the CHF. Okay. Dollar. Right. Where's that? Where's the yen? There we go. Right. Now, looking at the yen, I'm not sure if you guys did mark the same levels that I have on my charts, because these are the ones from that long page, whatever it is. You see the yen tested the 112.40. That's the 112.40 institutional price. Then it dropped, but there's still a gap to 112.40. So expect yen to keep rallying into this supply here. The yen to clear up this high. So long trades on the yen as of coming next week, we're going to be long. And if you go on a daily time frame so that you can mark out the levels, 109.732. I don't think we can see 109 in the next 2 weeks. You won't be able to see. Yes, market can drop down, but not by much. The only level that it can drop down to is these highs here. You see? That's where the yen can drop down to 109.732. Probably after maybe like 3 weeks, or maybe after it has touched 112.40. So the level that you need to look out for on the dollar yen is 110.65. 110.65. Let me zoom out.
110.65.
Yeah. 110.75. Can you see why I say 110.75? Here.
Yeah, because of that order block.
Yes. The supply, remember, when market comes back to a supply zone that has been broken, it becomes a demand. You see here?
Okay.
It's very easy, guys, to see. Very easy. You mustn't struggle when you're on your own reading the chart. There's one trick that I need to tell you guys. Whenever you want to see a strong level of supply or demand, the trick that you must use, you see, like yen, there's like a lot of noise here, right? Then you get this explosion here. You get this explosion here, right? Right now, the yen is bullish. You see, yen is strong, bullish. Now, how do you identify the order block? If the market is bullish, look for the last candle to the downside that is bearish, right? Look for the last candle to the downside, which is bearish. Market is going to the upside, right? Now, watch this. Let me grab my tool. I'm going to talk about the level from here. Let me highlight it. Let's say in that box. Now I'm going to zoom in. Let me zoom in. Let me tell you one trick. Focus on this channel here. Whenever you want to identify strong supply or demand zone, right now yen is bullish. That means it's creating new levels of demand, right? It's bullish. So it's creating new levels of demand that are being respected as it's going to the upside. Now, if you look on this up move, the last bearish candle before another strong push to the upside. Look at this candle, right? Look at this candle, right? Look at this bearish candle. Look at this bearish candle, right? After this, after every bearish candle that I've highlighted, there's a strong push to the upside. Can you see? And when price comes back, you see, a strong push to the upside. Here, market comes down, rallies. Why didn't it close below here? You see, when it came back, it didn't close below. It tested these wicks that tested the level, but it didn't close below. So you now, what you have to know is, okay, market is bullish. So whenever there's a drop to the downside, mark out the last bearish candle before a strong push. You see? You mark out that last bearish candle before the strong push to the upside. That's how you can identify a strong level of demand or a strong level of supply. Like now, the example that I've shown you guys, this is just to highlight a strong level of demand. You see, like this bearish candle here, market came back, it tested it, and then it pushed to the upside. That's a trade. You see, that is a trade that you would have taken because you'd have been monitoring this zone. So when price broke below and closed above, you enter, take the market to the upside. There, 170 pips. You see? Same thing. You look at the following. Let me clear up. You look at this bearish candle. You see, it tested this guy again, the one where you would have taken your trade. It tested it, but it didn't close below. Then it rallied. So now, most of the time, what you have to take note of, make sure your higher time frame direction is correct. If we say, okay, dollar index is bullish, yen is bullish, gold is bearish, fiber is bearish, then make sure when we are looking at the price action, don't look for the other part, like what we did yesterday with the gold trade. Don't look to the other side. See? Because the moment you do that, it's a failure. See now, gold, our stop loss was hit yesterday because we went against. After preaching the whole 2-3 weeks that gold is bullish, we went to go short. You see, so that was wrong. That was not correct. So the moment you have your higher time frame analysis correct, let's say, let me go to fiber. So fiber, we're bearish on fiber, right? Because market is going to the downside. So this is a daily chart. If I go to say H4, so this thing has been dropping like crazy. So now, when it comes to a bearish direction, you look for the last green candle to the upside. You look for the last bullish candle before a strong push to the downside. You see? So here, what do we have here? Isn't much. Is this one here? Check this top, right? Then there's this one also, but eventually market just went to the downside. Now, if you look at this level here, let me highlight this zone. This would have been the perfect entry to the downside. Yes, of course, now we are looking on the charts after, you see, after the trade has taken place. It's very difficult to do it in real-time market. But now you can already see we had this strong last bullish candle. Market is in a bearish order flow. So it's creating new levels of supply, right? So now when it pushes to the upside, that's your order block, right? Market tumble to the downside. Now, when it comes back, this is when you are supposed to take the trade. Of course, it didn't like test it much, but now your supply zone is the one. You see this candle here? That's your supply zone. If you look at the closing of that candle, look at the close of that candle. Exactly. Market tested and then dropped. Is that clear, guys? Because I've seen most people, they're struggling with this. Is that clear enough?
It's clear
Now
now.
it's starting to make sense now.
Right. Let me show you one more example because we only have like 5 minutes left. Let me show you one more example. Let me go to a chart that we don't usually talk about. Australian dollar. AUD. Australian dollar.
Australian, Japanese, Australian yen.
Let me go to the. Let's look at the Australian dollar. So AUD/USD, you see, has been. Okay, let me come on. Where's this thing? Let me go to my weekly time, monthly time frame. So market has been pushing to the downside, right? It has been bearish. You see, it has been bearish going into this zone here. Here. That's where market has been going to. So market is bearish. Now, let me go to a lower time frame so that I can highlight the supply zones. Say H4. Let me go to an H4 time frame. Right. Let's see what do we have. Market is bearish. Right. This is a very good example. Market is bearish. Look at this candle here. The last green candle before a strong push, right? That was a push of 33 pips. Can you see that, guys?
Yes.
Right. Let me do this. Rectangle. Let me do this. That is my last green candle before a strong push to the downside, right? Now let me go to an H1 so that you can see clearly. Can you see this candle here? This one.
Yes.
The last green candle that we are talking about is here, this high. And this candle tested the supply zone. And then market, this was our supply zone. Market went all the way to the downside. So it's a case of practicing. You must practice to say, okay, I need to be able to identify, say, bearish order blocks or bullish order blocks. Remember, when we say a bearish order block happens on a supply. A bullish order block is formed on a demand. because that's market anticipating to go to the upside. A bearish order block, it's market anticipating to go to the downside. Don't confuse the two. You see? So the green candle, this green candle, it's a bearish order block because there's buying the institutions. Yes, market is going to the upside, but institutions, they'll be selling. You see? They are placing their orders to sell when market retest. So you mustn't confuse the two. A bullish order block is formed prior to a new demand. A bearish order block is formed prior to a new supply zone. I hope that is clear. Guys, are you here?
Yes, I'm writing down. Sorry.
Yeah. Okay. Right. Here's another example. So this is the I think you're gonna have to rejoin for like another 10 minutes because the time is gonna cut now. So if it cuts, you must rejoin the session again.
Oh, okay.
Yeah. You must just rejoin if it cuts. So this is the Euro GBP. Eddie, do you remember this one?
Yes, I remember that one.
You remember this guy, right?
Yes, I do.
We are still going to the downside. So now I wanted to show you. You see this candle? The last green candle to the upside. This one. That's a bearish order block.
Okay.
Right? But when it forms, you only be in a position to highlight that it's a bearish order block after the following month has closed. Remember, this is a monthly candle. You see,
okay.
You see the following month, strong bearish to the downside, right? Then that's when you categorize it as a bearish